Bars in flames in Los Angeles as the protests sparked by sweeping U.S. immigration raids escalate with fresh clashes between law enforcement and demonstrators. President Trump and California Governor Gavin Newsom are trading barbs over the response. Trump's extraordinary step of calling up the California National Guard bypassing Newsom, raising legal questions about the use of federal military force. Live from Singapore, this is Inside with me, Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. As the situation in Los Angeles escalates, we'll speak with Peter King, former chair of the House Committee on Homeland Security. Elsewhere, Asian stocks starting the week higher, with the U.S. and China ready to resume trade talks. The flow of rare earth minerals set to be a key focus of discussions in London. And China's consumer deflation extending into a fourth month as price wars intensified and consumer demand remained weak despite the government push to boost spending. And this week, the most anticipated event on Wall Street is a routine bond auction. Attention will be on the sale of 30-year treasuries after the global investor pushback against long-term government debt. Here's a quick check on the markets. Asian stocks watching the much-anticipated trade talks within the U.S. and China in London, getting a boost this morning, 0.9% higher. China getting a lift despite consumer deflation extending into a fourth month and now faces the threat of entrenched deflation. Over in the U.S., the focus is on the upcoming auction. 10-year yield steady at 4.5% after surging on Friday. Traders bracing for a bond market test, with Treasury set to sell $22 billion worth of 30-year government bonds on Thursday. S&P futures down after closing at its highest level since February on Friday. Well, to our top story now, clashes between law enforcement and protesters in Los Angeles have escalated for a third day. The arrival of National Guard troops deployed by President Trump over the weekend, inflaming people protesting the Trump administration's sweeping deportation policies. California Governor Gavin Newsom says he has formally requested the White House to rescind the federal deployment, which he describes as unlawful, and return troops to his command. Defense Secretary Pete Hegseth said earlier that U.S. Marines could be deployed next if protests intensify. President Trump didn't respond directly when asked about that proposal.
We're going to have troops everywhere. We're not going to let this happen to our country. We're not going to let our country be torn apart like it was under Biden and his auto pen.
What's the bar for sending Marines to...
The bar is what I think it is. I mean, if we see danger to our country and to our citizens, we'll be very, very strong in terms of law and order. It's about law and order.
Joining us now, Peter King, former chair of the U.S. House Committee on Homeland Security. Peter, good to have you with us. How are you assessing the situation in L.A.? Does it justify deploying the National Guard?
The reason I think President Trump is correct in doing this is that it was not seen that the mayor of Los Angeles or the governor was given adequate protection to the federal forces that are in there. I mean, ICE is a legitimate arm of the federal government. It was there to arrest and detain illegal immigrants who are there, certainly those who are wanted for violent crimes. And when the riots, because these are gone beyond protests. These are riots. These were people starting fires, throwing bricks, and attacking the ICE agents. And it was believed by President Trump and his administration that the local authorities were not giving adequate protection to those ICE agents, and that's why the National Guard has been federalized, which can be done by the president. He has federalized the state National Guard to use them to protect the ICE agents.
Some comparisons have been made to 1992 when the National Guard was deployed, but in that case we saw widespread rioting, violence pretty much across neighborhoods. Not the same, they say, as what we're looking at now in L.A.
Well, we don't want it to get that far. And also we saw during the whole George Floyd riots that these often are very organized. So there's reason to believe that these demonstrations, and they're not just demonstrations, they're riots in many cases, are going to go beyond the level they were at. In other words, if they're not stopped early, they grow. The George Floyd, Rodney King ones back in 1992 were based on a specific act by Rodney King, who was accused of killing somebody, being murdered. Rodney King being attacked brutally by the Los Angeles police, and then the jury acquitting him, and that's what that was a specific reason. In this case, this is basically a revolt or an insurrection against policies of the federal government, and we saw what happened several years ago, that these things start and they inflame, and we have groups out there that agitate and inflame, and President Trump does not want it to go beyond what it is now, and he wants to put it down, stop it where it is.
We've seen and heard some pushback. LA Mayor Karen Bass saying that we've seen a chaotic escalation of the situation in LA, that you should just leave it to LA authorities to handle this. Is she right to an extent?
No, I don't think she is at all. I served with Karen Bass in Congress when she was a member of Congress. We got along, so this is not personal. But I think she showed during the terrible forest fires that they had in California that she's really not up to the job. And it was felt just by the reaction of the first 24 to 48 hours that the local police were not given the power, the authority to go in. They waited quite a while to respond. During that time, ICE agents were being attacked. So I think I would say it would have gotten much worse if President Trump had not sent in the National Guard. The thought of the National Guard being there, and that also now has the police cooperating more closely. So I think Karen Bass is wrong. In fact, I'm convinced she's wrong. And President Trump, he wants to stop this. He doesn't want it to get out of control, the way we did see with the George Floyd riots back in 2020, when things started and then it suddenly started appearing in various cities around the country. And in New York, we almost had a war zone here at one time. So no, he does not want it to reach that level at all. He wants to stop it now, nip it in the bud.
How are you assessing the risks of an escalation in LA? We've heard from Defense Secretary Pete Hegseth suggesting that perhaps the Marines could be deployed along with the National Guard if we see an escalation.
If that has to be done, I mean, the president has that authority to do it. And we saw, again, it's not as if just sending the National Guard is going to cause escalation. We've seen in these type demonstrations in recent years, which is much different from back in 1992. That was a one-off in 1992. As we saw in 2020, these are synchronized to work throughout the country, unfortunately, to have these riots break out. So I would say that the president's idea is to send the troops in now, stop it now, and he will use whatever force that has to be used. And as far as it escalating, there's much more of a danger of it escalating if the troops are not there. I think this is the best way to stop it, is to move quickly, stop now, and that will stop the escalation. So when people like Karen Bass or Gavin Newsom talk about President Trump and the National Guard escalating, no, it's, if anything, it's the policies of Newsom and Bass who have not done enough to protect the federal officials and in many ways enable these demonstrations to go forward, which then become riots, protests and riots.
Give us a sense of how this is playing with Republicans. Is there a sense that there is consensus among Republicans that this really needed to be done?
There's a consensus among Republicans, but also among many Democrats. I mean, if we're going to make this political, that's one of the reasons why the Democrats lost in the last election. Like, even like today, I see Kamala Harris is putting out a statement attacking President Trump and the National Guard, and saying almost nothing about, you know, the rioters and the protesters, we want to call them that. So no, I would say that certainly Republicans, certainly middle of the road people, and many Democrats who turned against their own party in 2020 because what they saw was a very loose and a weak policy on immigration and on law enforcement.
Is there risk, you think, that this could spread to other states in the U.S.? Could we see a broadening of the violence right now?
There certainly could be, but not because the National Guard is going in. I think there's more of a threat of it spreading if these initial riots are not put down and stopped at the earliest stages. So yes, there is a threat of it spreading, and that's one of the reasons that President Trump is trying to preempt that by acting now to stop it dead in Los Angeles, and hopefully by doing that, it'll send a signal to the rest of the country and to the rest of the governors and mayors that he's not going to tolerate these riots breaking out. We saw a summer of rioting in 2020, and we know there's groups out there, whether it's Antifa or others, who are agitators, they're organized, We saw it in New York, all of the supplies that were being brought in, how synchronized they are, the communication systems they had. So this isn't just a group of people who are angry. That was the case with Rodney King back in 1992, where his supporters felt that he had gotten a unfair deal in court and that those who attacked him were acquitted. That was one specific reason. But here, you're talking about a pattern of agitators, people on the left, people who are progressives, people who are in many cases anti-government, who are against the Trump policies overall, and they want to use these riots as a way to bring them down. So President Trump wants to stop them now before they go any further.
Peter, I must say that the rest of the world must be watching this in great disbelief. Is there unity in the country? During Trump's inauguration, you talked about how his policies and the second Trump administration could bring unity, but the incident we're seeing right now is showing just the opposite.
Well, Haslinda, what you're talking about, though, is I think percentage-wise, it's a very small percentage. It's a well-organized group. They are out there. Many of them aren't even citizens. And I would say the average person living in Los Angeles, in California, the average person around the country believes the president is doing the right thing. And they're opposed to these riots. They support the president's policies on immigration. Even though there's a certain problem that Trump is having on his economic policies and others, the one policy where he has a strong, overwhelming support of the American people is on combating illegal immigration. And this is certainly a major part of that, deporting those who are here illegally, especially those who are wanted for crimes or back to any kind of violence. They're the ones who are mainly being sought out. So the American people are on his side on this. So I think politically, the Democrats are making the same mistake now that they made during the 2024 elections.
Some are wondering what's happening to the First Amendment rights. Already we're seeing the come down on immigration. We're also hearing from the border czar threatening to arrest the mayor as well as the governor if they stand in the way of the federal government. How are you assessing this?
I think what Tom Homan, who's the ICE person involved here, what he is saying is that the local governments, even though they're elected and everything else, do not have the right to stop the implementation of federal policy being carried out by federal agents. The ICE agents have the authority to carry out these deportations. So if you have a mayor or a governor trying to prevent that, then he is violating the law. Like there was a judge from Wisconsin who was letting illegal immigrants escape. It was basically, letting them out the back door. So no, you cannot have local officials violating the law. No one is above the law. The Democrats kept saying that about President Trump, that no one's above the law. What he is saying is that these local officials are not above the law. Just because they're elected locally doesn't mean that they have the right to violate federal law.
Immigration is a huge policy in the U.S. right now, a big focus on that. And we're seeing that Harvard ban, accusing Harvard of having that close relationship with the CCP. Do you see evidence of that?
To me, there's no doubt that you do have a lot of the Chinese students, for instance, in particular, that have come in to have direct contact with the Chinese government. We know that the Chinese government is infiltrating. We know the Chinese government is stealing trade secrets. They are, if not our enemy, they're certainly our strong adversary. And so, no, there is a danger. I think we should be much more, to the extent that there are any foreign students coming in, they should be much more carefully vetted. That's particularly true with students coming from China.
So what should the end goal be, Peter? Should there be no Chinese student in the U.S.?
Obviously, Chinese Americans and Chinese immigrants have made a great contribution to the United States. As far as students, if I were in charge, if I were president, if I were the president of the United States or the president of Harvard, I would say, yes, allow Chinese students to make sure they're very, very carefully vetted. And also, I think we should start to limit some of the amount, 25% of the students at Harvard are foreign students. One of the reasons for that, despite Harvard's claim to be such academic excellence, is that those students pay full tuition. They pay the full amount with no breaks at all. They can afford to do it. So that's a big source of income for Harvard. So I would say be very, very careful in who we let in. Anyone with any contact with the Chinese government at all, no, I would not allow them in, because quite frankly, I don't trust the Chinese government.
As a result of that policy, do you think that would lead to mass deportation?
Well, not if we don't let further ones in. Obviously, they wouldn't be deported. I don't think you'll see, again, deportation. The visas may expire. Now, if they're here now on student visas and they are no longer going to be extended, then it's either voluntary deportation or you would have to deport them. I mean, the fact is, if they're not in the country legally, then they have to leave. So if their student visa expires, then they would have to leave, yes.
Peter, just one final question before we let you go. What do you deem as the biggest risk to the U.S. right now?
The biggest risk to the U.S.? I'd say we have to make sure we firm up our foreign policy. We have to realize, to me, the growing threat from China, as far as making sure we defend Taiwan at all costs. We cannot allow that to fall into China's sphere of influence. We have to firm up our relationship with Japan, Philippines, South Korea, make sure that we stand united against Chinese expansion.
Peter, thank you so much for your time. Peter King, former chair of the U.S. House Committee on Homeland Security. Still ahead on Inside, we shift focus to the U.S.-China trade talks later today in London, with access to crucial rare earth minerals set to top the agenda. A preview next. Keep it here with us. This is Bloomberg. Welcome back to Insight. Here are some stories we're following. Bloomberg's been told that TikTok owner ByteDance is replacing U.S. hired staff in Seattle with managers connected to China after sales on its e-commerce platform fell short in America. Sources say TikTok Shop had to scrap a goal of increasing its U.S. business tenfold last year to $17.5 billion. We're told more than 100 employees have left or been fired amid confusion over leadership. China says negotiations with the European Union on setting minimum prices for Chinese EVs have entered final stages. The bloc imposed steep tariffs on Chinese EV imports last year, alleging state subsidies give the country's vehicles an unfair advantage. China's Commerce Ministry says both parties have instructed their working groups to step up efforts to resolve differences. And we have China's trade data for the month of May to tell you about, which gives us an indication of the external demand amid those U.S. tariffs. You have China May exports in USD terms rising 4.8% year on year. The estimate was for 6%. In terms of imports in USD terms, falling 3.4% year on year. The estimate was 0.8%, and China's May trade surplus coming in at $103.2 billion. The estimate was for $101.1 billion. Of course, the early data had suggested solid export growth, probably supported by a partial recovery in U.S.-bound shipments after those U.S.-China trade war tariffs. Let's get insights, perspective. Our senior China politics reporter, James Mega, joins us now from Beijing. Break it down for us, James.
I think the big thing to look at is you're still seeing an effect from the tariffs, the U.S. tariffs on Chinese goods. So there's a 34% drop in exports to the U.S. in May. But if you take that out of the trade data, if you take U.S. trade out of the trade data, it's an almost 12% rise in exports. So, exports to everywhere else in the world looking very, very good. 12% is very strong growth. But we're still seeing the effects of the tariffs that the US had put on Chinese exports. And obviously, as you know, those weren't lifted until the 14th of May. And so I guess the second half of the month, maybe if we could see a day-by-day breakdown, you would have seen really, really low growth in the first half of the month and then a pickup in the second half of the month. So we may well see a boom in exports to the US this month. But what we're basically seeing is that Chinese exports are very strong to everywhere except, at least in May, we're very strong to everywhere except America. And then on the import side, still the same story we've been telling now for it feels like years. The export growth is strong, the import side is weak. And it's not just falling commodity prices, it's also just Chinese import demand, Chinese domestic demand is weak, and that's flowing through to just still contracting demand for foreign products from everywhere else in the world.
That's right. Chinese consumption still a big question mark. James, we also got inflation data out of China. Talk us through that report.
I mean, I think that's the same story there. You're seeing just deflation is still endemic in the economy. Consumer prices were negative, almost positive, but fell 0.1%. Producer prices down. I can't remember the exact number. It's 2 point something or 3 point something. More than 2 years now of consecutive month-on-month falls in producer prices. And I think if you look through to the export data, you'll see where those producers' prices are being felt globally. China's in deflation. Everything, the price of everything that comes out of a factory is falling, and that is both driving down prices domestically, but it's also driving down the price of Chinese exports. And so consumers globally are, seeing a lot more cheaper Chinese goods. If you're not a producer of those goods, that's great news. If you're a consumer of BYD cars in Australia, this is great news for you. If you're a competitor of BYD in other countries like Japan, this is not great news for you. So, but basically, the domestic economy is weak. That is pushing down prices domestically, and that is then going out into the world through the export channel, pushing down prices globally.
James, are there expectations of entrenched deflation at this point?
I mean, I think we're already in entrenched deflation. There's no sign that domestic producer prices are going to rise. You'll see you're bumping around zero basically for consumer prices, and some months like in April when you have holidays, or you see a bit of a pickup and then it drops off again as it did in the data we got this morning. But for the producer prices, for the factories, we're in entrenched deflation, and there's no sign that is going to pick up. And what has to happen is, like you're seeing in the car market, a consolidation of the car market needs to happen. There needs to be fewer producers. They need to have less capacity that is not being used, and then hopefully at some point in the future, prices would start to rise again as companies can actually try and start to make a profit. But in so many sectors right now in China, there is just too much production, not enough demand, and that is going to push down prices for the foreseeable future.
As it stands today, there is some optimism, right, because of that upcoming U.S.-China trade talks happening in London. Realistically, what can be expected?
I think two signs of optimism. One, we still have another almost 2.5 months or 2 months of ostensibly lower tariffs to the US. So I think June, I was expecting a pickup in May, probably a little bit too premature for that, as I was saying earlier, but a pickup in Chinese exports in June and July to the US just because those tariffs have come down. And then there's an expectation from these talks that maybe that those lower tariff rates will become permanent, or there will be an agreement. There's some signs of maybe not an agreement right now, but at least the US and China are talking again, so that going forward, you won't see those tariff rates rebounding up to much higher levels as they were earlier in the year. And so there is some optimism that they might be able to strike some kind of deal. But I think if you think back to 2018 and 2019, it took 18-20 months for there to be a deal. So I wouldn't be expecting everything to be solved in a few days of talks in London this week. I think that's going to be a very long-term kind of negotiation, but maybe we'll see better tariff news.
Especially when it comes to minerals and magnets. James, thank you. Our senior China politics reporter, James Mega in Beijing. Now, still to come, Robeco joins us to talk fixed income strategy and why they're seeing attractive real yields in Thailand, Indonesia, as well as Australia. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. Markets face a key test this week with a routine U.S. bond auction turning into one of Wall Street's most anticipated events. That's as investors sour on long-dated debt. Avril Hung has a preview for us, and Avril is the twin challenges this week.
Yeah, because not just the bond auction, we also have U.S. CPI data, which I'll get to in just a bit, but the U.S. Treasury is selling $22 billion worth of 30-year government bonds, and this is worth noting, part of its regularly scheduled borrowings. But given the backdrop of these concerns about US debt, the deficit, it's turning into a key test of market demand and sentiment. And of course, this is also coming not long. I think after last month, we saw the yield on the 30-year almost hit 2-decade highs of 5.15%. So there's a lot of concern in the markets how the investor space will actually digest all this. To be clear, though, I don't think anybody's really expecting this to be a so-called failed auction. There are backstops in place to prevent major market dislocations, and then yields at roughly 5% could also prove attractive to some investors. But that being said, it's still a key test for the board, particularly for US stocks, because as you said, it's not just about the bond auction. You also have the US CPI data. And note that US stocks, they're hovering at roughly the February high. So they're in need of fresh catalysts. And even though we're seeing global steepening kind of been on pause since the middle of May, note that since then, not much has really changed, whether you look at the US government's borrowing and spending plans. So the trend of steepening seems very much intact. That seems to be the likely outcome. Now, of course, we've been seeing also Chinese bonds clearly going the other direction. Today, we got trade data holding steady. We had, though, that deflationary pressures based on the recent data showing that trend is very much intact. So when it comes to Chinese bonds, the expectations is that the yields will sort of be kept with a lid on them. Now flip the board. If you take a look at this chart courtesy of MI's Mark Cranfield, it kind of reinforces this idea that when it comes to the deflationary pressures in the country, they all support the case for more policy accommodation. So whether it's in the form of PBOC rate cuts or fiscal stimulus, the trend for Chinese bonds is that their supported yields would be lower. And even though they're range bound, given how yields could be capped, that could be supportive for Chinese stocks. And you can see from this chart how Hong Kong stocks are kind of being lifted recently given soft Chinese yields. Has.
Avril Hong, thank you so much for that. Let's get insight. Joining us now, Chow, Head of Fixed Income Asia at Robeco. How good to have you with us. Avril talked about low yields expected for Chinese bonds. Do you share that view?
Yes, we do. We share this view. I think there's a lot of reason to be accommodative right now. The reason why we're not more optimistic is actually the yield differential between the Chinese CGB and the US is it's going to is at all time kind of these levels, and I think that's what's going to keep a cap and kind of yields going a lot lower, but certainly not be moving up.
You talked about limited outperformance. What will it take for Chinese bonds to outperform, to move out of that range?
I think it's, either number one, we get a completely change in investor sentiment, or there's a view that foreign investors maybe for currencies or other reasons want to kind of boost their investments within the Chinese bond market. Other than that, I think in terms of fundamentals, I say they're going to be accommodative policies, but that is already kind of quite priced in. There is also a limit on how low they can go, because obviously we need kind of decent yields for the banks and the other financial institutions to be holding the CGBs as well. So that's why we believe that actually, these range-bound levels will remain.
The thing is, it may be range-bound, but Chinese bonds have also been spared of the volatility.
Yes, and I think, I think we have talked a lot about, mostly the more, I would say, developed bond markets, such as the treasury and actually, in some sense, the JGBs, a completely different dynamics than that of the CGBs in terms of more issuance, which is also faced here, but also the fact that risk premiums in some of these bond markets and the fiscal situations are actually somewhat of a concern as well. And particularly, as you highlighted, the US, there are some structural shifts in the view on US Treasury that actually is new to what we were facing a year ago.
Would you say that China's disinflation or entrenched deflation makes other EM bonds attractive?
Yes, I think particularly with the trade dynamics. We've looked at the trade dynamics and how China is so much more embedded in the supply chains of many of the EM countries that some of that deflation impulses is actually, helping them in their, in the past, some of these countries have had much more kind of inflationary pressures, and that's really helping them to be able to be more accommodative in this policy round, and the fact that the weaker US dollar again, and increased credibility, actually, some of these central banks does make EM bonds kind of quite attractive in this cycle as compared to previous cycles.
Which ones in particular?
We are quite keen, actually, right now in the IGBs. We like the Indonesian bond market right now. I think, the yield is relatively still attractive. The currency is kind of stabilized a bit. So I think we quite like those. We also quite like Thailand. Again, we've not as high yielding as Indonesian, but again, still quite a lot of room for more accommodative policy.
Tuha, we've seen unprecedented volatility in the bond market, especially in treasuries. We know front and center this week is the 30-year auction. How big a risk is this for the market, you think?
I think that the Treasury would be very, very hard-pressed to make sure that, this is going to be a relatively decent auction. I think it is so well documented. I think so. We shouldn't hopefully expect too much surprises, particularly at these kind of level. A lot is priced in, but I think much more of a concern for us is actually the more longer-term trajectory, and if these risk premiums that now have been priced into the Treasury become much more entrenched. I think that is much more of a problem. And secondly, in terms of that, the cost of funding for US corporates, which we know is actually more in the long end than in the short end, these are what we're kind of looking out for, not just the Treasury auction, but actually the long-term risk premium that we're now expecting in the US.
We have the auction, we have CPI print. Would you say that nothing can change the trajectory of the Fed, given that a lot has been priced in already?
I mean, the Fed, I do think they have some room to move, and I think they just want to be able to wait to see, the data is definitely kind of supportive of some ability to ease at these levels. I think what they wanted to see is to see some clarity. What we haven't seen in the US is a collapse in the economy, although both the soft and the hard data is definitely turning downwards. It has not been, as disastrous as some of us had fear in the market, and so therefore it gives them some time to react, but definitely they don't need to be panicking at this stage.
We know that the popular trade has been the bet that long-term yields would continue to rise versus the shorter-term bonds. What's your take on that?
I think we've reached quite a decent level right now. I think we will need to see a lot more bearishness for that curve to continue to steepen a lot more from these levels. I think the investor move now, if you look at the yield differentials between EM and the US, it's at, very levels we haven't seen for quite a number of years. So I think that's going to keep a lid on things for now. But and so therefore, actually, the Treasury may actually have some respites for now. But I think when we look beyond that, and we look at some of the more structural changes in the US, we have to be more concerned that if those risk premium between EM and, US and EM debt may be actually structurally much more compressed than they had been in previous cycles.
So having said that, where do you see yields headed? Because when you take a look at 30-year yields, they're about, 18 basis points below the recent highs.
Yeah, I think the reason I think we stay around this range. It's again, these are very, very high levels in terms of, especially if we think about the inflationary impulses that is actually trending downwards. That these are really attractive yields. I think it's the risk premium, and I think this is where the market is still struggling, particularly with the fiscal bill that's going through. I think once we can get some sort of clarity of where the fiscal position is, it's going to be easier to price. But right now, that seems to be more dominating. As well as these concerns that if investors are going to have to, global investors are going to have to diversify away from, their holding of the Treasury, which that structurally changes the premium, which is beyond kind of the usual macro data that we watch out for when we price the Treasury.
Duha, expectations are that the dollar will go weaker from here. Today, the dollar is weak, presumably, as investors keep track of developments in LA. What assumptions are you making about the dollar?
I mean, we have had a kind of a weak dollar for some time, but I think we do feel like now at this level, it is also a very consensus trade. Everyone has a very consensus trade that of a weaker dollar. So we may be having even have a bounce a bit for now, regardless of the long-term trajectory of just, generally a weaker dollar. But I do think a lot of it has actually, in the short term, has actually been priced in. So not much expectation for it to go much lower at these levels for now.
And the best crosses for the next 12 months?
Oh, probably we're quite.
Is there the euro or the yen somewhere there?
No, I mean, actually, maybe slightly different. Actually, we were thinking the CNH, which is the IDR, again, more to do with carry as well as, we're kind of getting a bit more optimistic that the peer could turn around a bit here, and then the positive carry on the bond there. And this, as I mentioned before, in terms of the CNY, we kind of expect that to be quite range bound and use quite low. Yeah.
How about the rest of emerging market currencies?
So I don't know if we think this is emerging, but I mean, we in Asian currencies, we also quite like the Sing dollar. Again, for safe haven reasons, I think we think that, as some of the kind of the big surpluses some of these investors have in the dollar, they could bring some of that back, continue to bring some of that back home. And we also kind of quite like the yen. So those are the emerging market ones, but those are the kind of more safer haven trade that we'll probably be putting on at this moment. I think we think some of the EM currencies for now have done quite well, may take a bit of a breather for now. And as I mentioned, the dollar probably not weakening much more from these levels unless we have some more big events kind of going on in the US beyond that we have already had, which is quite a lot so far.
We have new headlines every day. Tuha, thank you so much for that.
Yes,
Tuha Chow, Head of Fixed Income Asia at Robeco. Now, meanwhile, U.S. labor data came in as a positive surprise for the markets. While job growth moderated in May and prior months were revised lower, Friday's report managed to narrowly beat forecast. The U.S. Labor Secretary expects the pace of job creation to continue after the economy added 139,000 new jobs last month. Laurie Chavez de Reyma also told Bloomberg the Trump administration is focused on protecting American workers first.
We are excited, 139,000 new jobs, and that President Trump, with his dedication and his leadership, really has beat expectations for the third month in a row. Our goal is to grow this economy and grow this workforce, and the president has done a wonderful job in accessing companies to invest in the workforce, and we're seeing it across the country. So while jobs are continuing to grow, and we might see a decrease at the federal level, which is another great thing that we've seen 22,000 jobs leave the federal public workforce, and we're seeing it at the local level. So there's a lot to look forward to. There's a lot that we're excited about, and we couldn't be more excited for this economy in this third month in a row of a growing jobs report.
What do you think is behind, though, the drop in the size of the labor force?
Well, what we want is to grow that labor force. We're seeing increases in construction jobs. We're seeing increases in transportation and in healthcare. While the manufacturing sector is holding steady, what we're excited about is the focus that the president has on the skilled workforce. Again, my part of this equation is to grow that workforce. And as we transition through this process of onshoring, and the president has done a wonderful job in negotiating some of these tariff talks, tens of trillions of dollars are being invested. This workforce is going to continue to grow.
The unemployment rate remains steady. A lot of economists will point to the fact that potentially it's for the wrong reasons, not because jobs are plentiful, but because workers are dropping out. Are you concerned that too many workers are dropping out, especially in some of these areas that are mostly filled with immigrants?
Well, certainly what we have seen in the last few months is that native-born Americans are the ones where the job growth is happening. That's exciting for the American people. We want to make sure that we're protecting the American worker first, and we want that labor participation rate to go up. I will tell you, unemployment is holding steady. That is a good thing for the American economy. We'll continue to focus on that as the president's executive order with 1 million apprentices across the nation, and also through an executive order that we're going to have the skilled workforce with AI. I'm telling you, and I'm confident that that workforce is going to continue to grow, and we're going to see these numbers continue to climb and unemployment rate continue to drop.
Do you foresee wage pressures potentially reemerging to fill jobs if there are fewer immigrants coming to the United States, which is a policy of this administration?
Well, I can tell you right now that, wage growth, hourly wage growth is up almost 4%. That's great for the American people, more money in their pockets. And with this one big, beautiful bill that the president is focused on, we are going to see no tax on tips, no tax on overtime. Do you know what that does for a family of 4 who possibly can put more money in their pocket? I can tell you this, one big, beautiful bill equals one big, beautiful workforce.
And that was U.S. Labor Secretary Laurie Chavez de Rima speaking with Bloomberg's Anne-Marie Horton. Well, India's just kicked off its trading day. Let's do a check on how the initial numbers are. The RBI, of course, cut rates by 50 basis points, which was not the consensus. In fact, the consensus was for a 25 basis point move. The Sensex currently up by 0.5%, gains too for the rest of the benchmark. The RBI unexpectedly reduced the cash reserve ratio for banks. It also changed its monetary policy stance to neutral from accommodative. In terms of the Indian rupee, flat versus the USD at 85.66. Now, still to come, after an initial snub, India's Prime Minister Narendra Modi has been invited to the upcoming G7 summit in Canada. More on the implications of Ottawa's decision. Keep it here with us. This is Bloomberg. The invite finally came. Indian Prime Minister Narendra Modi has confirmed that Canada has invited him to the upcoming G7 summit. Relations between New Delhi and Ottawa have been strained since the death of a prominent Canadian Sikh leader in 2023, which Canada accuses India of orchestrating. Well, for more, Bloomberg Sudi Ranjan Sen joins us from New Delhi. And Sudi, the invitation came pretty last minute, but still, you know, it is an invitation that Prime Minister Modi wanted badly.
Well, exactly, yes. And that's left many people here wondering because the invite comes about 9 days before the summit. While, it is nothing, it's not that we've not seen something before this. At the same point of time, it, sounds and appears a little odd that the invite came so late. In fact, officials here in India and in Canada were more or less of the view that since the invite, hadn't come up by the first week of June, the possibility of Prime Minister Modi going to the G7 summit looked very, very dim. But, with the invite coming, things are looking up, so to say. But one cannot, exactly say that the relationship between the two countries are back to normal because there's a huge distance that the two countries need to travel. Envoys need to be posted back. And the entire issue of transnational crime that Canada accuses India of also needs to be sorted.
Of course, just putting it out there, India is not a member of G7, but it has been a regular attendee. You talked about the status of Canada-India relations. Where are we with that, and what are the chances that those issues can be ironed out?
Well, I mean, those issues can be ironed out, but the differences between the two administrations or the two countries, let's say, because Canada has got a new administration, are quite huge right now. If we can go back a little, both countries in a tit-for-tat measure, pulled back their envoys, downgraded the diplomatic contact, reducing number of diplomatic staff in each other's embassy, accused each other while Canada accused India of, helping or carrying out transnational crimes, India kind of is and blames Canada for giving Sikh separatists a free run in their country, and it has been protesting very, very vociferously since 2023. So those differences are there, but the good part of the entire issue is that the trade relations between the two countries continue to hold. India, students from India in large numbers still continue to look at Canada as a possible avenue for pursuing higher studies.
Canada, of course, has a new Prime Minister in Mark Carney. Does it make a difference in how he will negotiate with Prime Minister Modi? Will it be any different from Justin Trudeau?
From our reporting in the past, we know that the relationship between Prime Minister Modi and former Prime Minister Justin Trudeau were not really, good. It seemed that they personally did not click very well, unlike the relationship that we see between Prime Minister Modi and President Trump. Now, with a new Prime Minister in Canada, in Ottawa, there is a possibility that the relation to the two leaders can come, sit across the table and try to helm the relationship, try to get back the relationship back on keel. That's a huge possibility. But then, there are internal politics on both sides. We have seen very strong remarks coming in Canada after the invite. Similarly, we have seen very strong remarks from people at large coming in, from India. So those are the things that these two leaders will have to kind of, tackle before they can bring the relationship back on track.
Sometimes the chemistry can work and help, resolve differences. Sudhi, we also know that front and center for India is the trade negotiations happening at the moment. The U.S. team expected to extend the visit in India as talks gain momentum. Put that in perspective for us.
Well, I mean, it's, my colleagues, my colleague Shruti Srivastava has reported over the weekend how the team has extended its stay in India. It's a very, very, good positive sign because it shows that, the negotiations are on track. What we also know is that India and US are trying to look at a deal, a structured deal. It may not come through all at one go, but it goes step by step. This shows the pragmatism that the two sides are looking at it, because a trade deal with the United States, or any trade deal for that matter, is a very, very difficult and requires a lot of negotiation. But the very fact that, the team in India is extending, we have seen very positive statements coming out of both sides, shows negotiations are on track. And also, if I can add very quickly, we can and we may expect another bilateral meeting between President Trump and Prime Minister Modi on the sidelines of the G7 summit.
Sudhi, thank you so much for that. Bloomberg's government reporter Sudhi Ranjan Sen there for us. Now, before we go, here's a look at our guest for tomorrow. We'll be speaking to Franklin Templeton Institute's Christy Tan. We'll be talking about investment strategies in a world of tariff turbulence. That's as we keep an eye on the US-China trade talks in London later today. That is it for Insight. Horizons Middle East and Africa is next. Keep it here with us. This is Bloomberg.